Well, let's get straight into it. This evening, you are analyzing HoneyBun's financial results, and this is for the year ended September 3, 2023.
September 30.
It's September, 30.
You said 3 a while ago.
Yeah, that makes sense. It's usually, I have 3 in my notes, but 30 make more sense. So how did they do?
You know, HoneyBun had their best year ever. The company surpassed the $3 billion revenue mark for the first time, and they were able to actually grow revenue by 16%, you know, which was against the backdrop that they faced last year, which was higher prices for, you know, inputs, higher fuel costs, and just inflation all around. So when you actually get to the gross profit margin area, the gross profit area, and you actually take the gross profit margins, HoneyBun was able to increase its gross profit margin from 39.8% to 43.3%. Now, for a company to increase its gross profit margins by that much, even against the backdrop of higher sales, it speaks to the company able to actually translate, you know, the additional equipment that they have on board to actual volumes being sold on the shelves. So we saw that from HoneyBun, you know, and at the end of the day, they're able to grow the net profit by 12% to $232 million, which all bodes well for overall shareholders. And it's kind of interesting to think that back, I believe it was, May 2012, HoneyBun went up listed on the JSE as a much smaller business, earning a lot less in terms of profitability, and now they're contributing about over $50 million annually to the GOJ's coffers. So, you know, HoneyBun's story really speaks to the success of the junior market in giving these smaller companies the space to thrive under a more attractive regime in terms of benefiting the tax remission, alongside the requirement for governance to be in place to really thrive and become larger taxpayers later on. Because if you were to potentially go back right now and look at the amount remitted over the last 10 years and look at the last 2 years in terms of taxes paid, you know, it probably is pretty astounding. And even for HoneyBun, they actually grew their staff count by, what was it again, 29%, from 235 persons to 302 over the year. And that was also accompanied by a significant capital expenditure spend. What does that mean? They spent $167 million on new equipment for the business. So all this is just showing that the company has taken its time to really sit down and ensure that it's focused on delivering its business mantra and also delivering returns to shareholders. So while you would have seen this improvement in earnings, you're not seeing that same translation in the stock price. So HoneyBun's stock price was down 18% last year, and even with the results that came out recently, you're not seeing that same level of reaction to the great results. And you know, it's just against the backdrop of higher interest rates. We're hearing different senior leaders or senior persons in the space say the market's going to take a little bit more time to recover. So while HoneyBun, you know, alongside some other companies are showing great results, you're not seeing that similar pace of growth in the stock price. So if you actually look at the price to earnings ratio, which is a metric to compare amongst companies in the same sector against the market, HoneyBun is about 12.7 times, which is pretty low for a manufacturing company. And if you look at other companies like our Sync or Jamaica Broilers, it's potentially even lower. So this is all to say that manufacturing companies are seeing some level of true growth in between their export and domestic markets, but it's not being reflected effectively at the same pace in their stock price.
It's interesting because it's kind of the same situation with most companies on the market right now. Even the ones that are doing well internally, the stock prices is just not reflecting it. So it could be just a sign of the times right now, David, and that loss of investor confidence that we were speaking with Mr. Goulding about a short while ago.
So there are two sides to that equation. While, you know, persons are and should, you know, have some level of concern with the developments that have happened over the last year, at the same time, if the companies themselves are performing appropriately and their auditors are doing their appropriate jobs in terms of reviewing the financial statements and preparing them, then there shouldn't be as much worry for some of these companies, especially when some of these companies are still in what you'd call a progressive expansion phase that is not just looking at the local market, but also on the international market. So, for example, Synchrony wants to eventually get 10% of their sales to be exports. That's under 2% right now. You have Jamaica Broilers, which is driving a good sum, in a sense, from the US market that they're operating right now. We're seeing where Separate is benefiting from their AS brand acquisition in Trinidad. So it's going to take some time, for investors to start putting some level of capital back into the market. But that is also, you're seeing potential like a MJE, and with MJE in particular, taking some of these larger positions, some of these Jamaican companies that are growing at astonishing paces. So if you've actually sat down to go through the audited financials, some of the unit trusts, or even the quarterly publications, only a few companies actually do this with their unit trusts, you've seen that because of the decline in the stock prices, persons would have had equity-based unit trust or mutual funds would have been in more withdrawals during the year to preserve value and to potentially deal with their own personal expenses. So that is also a potential factor in terms of what we're seeing in the market right now, whereby because the persons or the unit holders are seeking to redeem more units in the unit trust, the unit trust has to be selling more shares on the market to get that cash to pay out in your redemptions to the unit holders. So there is just a very, I should say, continuous cycle on different fronts, whereby because prices are going down, prices are requesting redemptions, and that this has a critical type of impact. But at the same time, Jamaican economy today is drastically different than the Jamaican economy a decade ago. Mm-hmm. So while, we would have seen the market had its significant height in 2019, we're having a larger market in terms of our massive, our garden holdings of AS brand, and we have, several over Cinco. We have, who else can I just think of right now? But we have a lot more diversity in our market, in a sense of newer companies with larger scope. And the reality is, business is not going to stop with reduced investor confidence. The only difference is that for some persons, they're going to be able to collect significant gains by purchasing some securities at significant discounts, where that actually results in getting a higher yield on the dividend income in some instances. So I hope that makes some level of sense in how I'm explaining it.
Mm-hmm. So how do you feel about what Marlene Street Forest said recently, that it's going to take another 2 years before we start seeing the market recovering?
I agree with her comment. Someone had asked me last year, earlier this year, what's my expectations for the market, and I just pointed out that based on the uncertainties that exist in the environment and the uncertainty that exists in persons timing the rate cuts, you're going to have persons be looking towards other investment opportunities that give them some level of stability and semblance. Because if you looked at the market last year, 2/3 of the securities or I should say 2/3 of the ordinary companies or ordinary shares were down last year, and most of them are down double digits. Some companies would have been reducing dividend payments to shareholders, which is a problem because if you're getting dividends, it's just cash in your pocket. And you've had persons just say, why should I take in this level of risk in the market at the moment? When for me, my main focus is I need to be getting cash and I need some level of liquidity. And it's just a function of how the economic cycles work. And at the same time, the economic realities of different individuals. Because if the JSC's bond market, for example, was of a larger scale, people might have been seeing potentially more fixed income trading in that space. When you have foreign securities trade at the moment in that bond market, but you're still seeing not much trading in that perspective. But if you speak to the brokers, or you actually look at the Bank of Jamaica and GOJ issuances within the last couple of months, you're seeing some significant oversubscriptions by investors. So why would I take the risk of entering the equity market and facing that issue of being able to actually exit without a significant loss and potentially less dividend income or no dividend income, when I can actually go into the fixed income space and get 7.5% and above with less risk in context? Because, for example, the BOJ's certificate of deposit, the 30-day, is giving 7.5% annualized. You can just keep rolling that amount over every month and be receiving, a stable level of income that suits your needs and at the same time allows you to react if needed. So if you do see, for example, an opportunity to actually enter a particular security somebody's willing to sell, then because you have the liquidity on hand, you're able to actually seize that opportunity rather than you actually said, all right, this stock looks great, looks like it's bottomed out, and you just see the price keep falling. And you always hear about a falling knife. That's something that has happened, to some persons in recent times where they said, stock bottomed out, I'm going to jump in, and they just keep going down. And because they don't want to sometimes realize it's loss, they're just holding on to the security longer. So liquidity is the name of the game right now. And if you're a person with cash, you're a person who can actually bargain for discounts. So if you contact your broker, and most parents are aware of this, you can actually ask them to arrange a trade for you with another person of that security on your behalf. So instead of you going to the market and seeing nobody will sell at that particular price that you want or in sufficient volume, you can actually ask your broker, hey, I want to get 10,000 shares, let us say $1, and your broker would go out, send that order out to different brokerage firms, and you just might get it.
Makes sense. Makes sense. Take advantage of the opportunities in the market now. In
No,
every crisis, there is opportunity.
Kalilah, if you sit down and do what one would call an annualized calculation on some of the prior dividend payments, or even look at the prior runway that exists for some of these securities, it's an entirely different ballgame. So there are opportunities in the space, but at the same time, because there is, level of uncertainty in terms of when risks are supposed to go down, and persons also having to be dealing with their own personal expenses increasing, it is a cat and a mouse game. Because I saw somebody earlier told me that their home insurance went up, another financial institution increased the chart and peril insurance on homeowners, and you're just seeing all these other expenses come up out of nowhere. So having the liquidity on hand is good to take advantage of some of these opportunities once you're sufficiently able to allocate that capital. But at the same time, persons have to be very cognizant of what's really going on in the space. Because for example, today I remember seeing a security trade at $1.30, and the last time I saw the security trading that low was when COVID initially hit back in March 2020. This company had an IPO price of $1, and while business is down, they're a much bigger business today than they were a couple years ago. Doesn't mean a company is a great catch today, but at the same time, everything has taken in perspective of not just the current environment, but also the potential for the future. And deals exist locally and abroad, because in the US market, where there is sufficient liquidity in the space, in context, you're seeing securities just move pretty aggressively upwards in that space.
I only chuckled because I just saw a comment from Blue Maho Holdings, who viewers you would have heard about in What's Hot. Blue Maho says that's how we got our KLE shares, taking advantage of opportunities in the market. And we're going to have Blue Maho Holdings on pretty soon, possibly next week, on the show to discuss, their strategic moves and a lot going on with them. I know you did an interview with David Mullings recently as well. So 2 Davids joining forces. But thank you for joining me this evening, David. Appreciate your time as usual.
Thanks again, Kalilah, and I'm looking forward to see you and everybody else, another 2 weeks, and hopefully I'll make some moves with you this year in terms of other partnerships.
Absolutely.